Today, U.S. markets tread cautiously as indexes hover near record highs, while investors parse new economic data and await the upcoming Federal Reserve policy decision. The broad market was mostly flat to modestly positive. The S&P 500 inched up tilde 0.3%, closing around 6,849.72, while the Dow Jones Industrial Average rose roughly 0.9%, finishing near 47,882.9. Meanwhile, the tech-heavy Nasdaq Composite added tilde 0.2%, ending around 23,454.09. Much of the optimism stems from a surprisingly weak private sector payroll report for November, down 32,000 jobs, which has bolstered expectations that the Fed may cut interest rates at its December 10-11 meeting. Sector-wise, gains were led by retail, energy, financials, and smaller-cap firms, a sign of rotation away from mega-cap tech. Key movers included companies tied to AI infrastructure and data centers, as well as select retailers that delivered strong earnings or forward guidance. Still, caution persists. Tech stocks remain under pressure following mixed earnings results and uncertainty around how quickly AI-driven growth will translate to profits. Meanwhile, market participants are watching upcoming inflation data and jobless claims, both potentially pivotal for the Fed's rate decision. What investors should know. The overall market tone remains cautiously optimistic, elevated, but not euphoric. Moderately strong breadth suggests some resilience beyond just the largest names. A rate cut by the Fed could benefit sectors such as financials, real estate, and interest rate-sensitive industries. Those seeking income or dividend yield may want to consider dividend-paying equities or bonds. For growth-oriented investors, identify companies with solid fundamentals, especially outside of mega-cap tech, that could benefit from a lower rate environment and renewed money flow. Keep an eye on upcoming macro releases, inflation, jobless claims, and the Fed's statement next week. They could reshape near-term sentiment. Today, U.S. markets